Hello and welcome to the NASDAQ market site in Times Square. I'm Jane King, and with me today, David Feldman. Welcome, David. So good
Thank
to
you,
have
Jane.
you here.
Great to be here.
Attorney with Dwayne Morris. Also, you literally wrote the book
Here it is.
on Regulation A, and that whole, wrote the book and really kind of helped write the law. So
Yes.
let's start with your background and how it
Sure.
came to be that you were an expert in this area, and then we'll get to the book.
Well, I've always been a small cap guy and helping exciting young entrepreneurial growth companies go public and,
Yeah.
and raise capital. And in the 1990s, way back when, we did a lot of small little IPOs. They kind of went away in 2000, and there's a lot of speculation as to why that happened. Nobody can really pin it down, but during the 2000s, we did these kind of reverse mergers, and that was a way to help these companies still go public. That was a little awkward, but got it through.
Okay.
Late 2000s, some frauds or alleged frauds kind of ended that. And we started looking at other options. And we worked with the SEC initially to make recommendations to them about improving old Reg A, which was a way to do a simplified, streamlined IPO for a small company, but make it more attractive. And that's what we worked on with Congress and the SEC.
Okay, so you helped write the law. So tell me, let's just start with where the law stands right now.
So as of 2015, you're allowed to raise up to $50 million in a public offering that is exempt from state blue sky review, which is a really important burden that many companies had going public over the counter. But the SEC is allowing very quick review of these, so the process of the IPO is quicker, simpler, faster, more cost efficient, and we're seeing the ability to now go out and test the waters with all investors. So with a traditional IPO, you're only allowed to talk to institutions before you go public.
Okay.
With Reg A, we're bringing Wall Street to Main Street, and you're allowed to go out and do a splashy internet, Facebook, Twitter, LinkedIn, TV, radio, YouTube campaign to promote your IPO.
Well, that's what's so cool about Reg A Plus is that your fans, your customers can participate in the success of the company. You don't have to be a big Wall Street bank to do that.
Right, so we're seeing kind of 4 buckets of deals. We're seeing REITs use this, which is very interesting. We're seeing folks in just traditional underwritings seeing that this is a faster, quicker process. We're seeing these hybrids where it's a combination of a traditional underwritten deal and the public coming in. And we're even seeing people go and raise money without an underwriter that have a strong social media following, or they have a big fan or customer base, and they can go right to those people to invest in their company.
Sure. Okay, so let's get to the book. So who was it written for?
For everybody.
Okay.
Well, maybe not my grandma,
Right.
may she rest in peace, but for anyone who's interested in building a company.
Either an investor or an entrepreneur.
Investor, entrepreneur, investment bank, attorneys, accountants, and so on. It's not a legal text. It's really written in plain English, so
Okay.
people can really understand both the history of how we got here and also what the rules are today and how to get things done. In addition, we throw in an update on my prior books on other alternatives to a traditional IPO, like reverse mergers or direct listings, which has now been approved by the New York Stock Exchange. You couldn't go public on the NYSE without an IPO. Now you can. We have companies like Spotify who've announced that they plan to go public, but don't need to raise money. So that we talk about as well.
Now, there's been about 70 of these Reg A Plus companies, right, that have completed an IPO
Right, as of September 30th.
as of September 30th. How has that gone?
So for 9 of those are trading on national exchanges, including the first one we did called Myomo
Yes.
back in June. And so that's pretty exciting that 9 of them have started trading, including Chicken Soup for the Soul, Fatburger, Kathy Island's company Level Brands, iPic just finished their IPO. So it's pretty well-known names that are doing this, but also like Myomo, companies that are just exciting growth companies. And then there are many companies, as I mentioned, that are not trading on national exchanges either because they choose not to trade like the REITs, or they choose to trade in the over-the-counter markets initially.
Okay. And then has there been some growing pains in this whole process? I'm sure there always is. So.
Yes, I mean, we'll start with the fact that the first deal we did, Myomo, was a process of sort of macheteing our way through these new regulations for the first time and making sure they worked, and working very, very closely with the SEC, who were great partners and greatly helping to us. But the first batch of companies that traded on national exchanges are seeing their stocks go down, and people are looking at that and trying to assess why. And we think we need to bring more of these firm commitment underwritings that allow for more stabilization of the trading than these best efforts deals, which is what were done previously. In addition, we're hoping the valuations will be a little more adjusted to account for the possibility of the stock going up.
Okay.
And then we think it'll iron itself out.
So those are kind of the things that are standing in the way of it becoming bigger and a more legitimate, I mean, I don't want to say legitimate, but more mainstream use.
Yeah, and education.
Okay.
You know, for Wall Street to move its big ship, even a little bit, takes time.
Oh, sure.
And everyone does things the way they do it, and they don't want to change that unless there's a really good reason. And so with things like the book and other education that we're doing in panels, et cetera, my blog, we want people to learn about it. And once they learn about it, I think they'll realize it's not rocket science and that there's a lot of potential benefit to using this technique.
And what's the prognosis then for Reg A Plus the rest of this year and the next year?
I think over the next year or two, we're going to see the higher tier underwriters start moving in. It's already happening. The levels of the Maxim, Roth, Rodman, Wainwright, Aegis are very much looking seriously, if not already doing it. And then even above that, the Jeffries, the FBRs, the Stiefel Nicholas, those types of names hopefully will enter as well when they see for their smaller deals that this is worthwhile. And the House has already passed a bill to increase the limit from 50 to 75 million, which would be very exciting as well. And we're hoping that that can go all the way through, and or the SEC takes the same action, which they could do on their own. Okay, so let's take a look at the book and get the exact title. Regulation A Plus, another alternative to a traditional IPO. Absolutely.
Okay, and where can somebody find and buy that book?
It's on Amazon and in bookstores, but the best price I think is Amazon.
Amazon. Okay, thank you so much, David, for coming and sharing your book and all your knowledge with us.
My pleasure.
We appreciate that. And thank you as well for joining us. I'm Jane King at the NASDAQ Market Site in Times Square. Have a great day.